Ray Dalio, one of the world's most respected investors, just gave a chilling warning. He says we're not just heading into a recession, but something far worse. From debt overload and global conflict to the value of your money collapsing, the risk isn't just economic, it's everything. Here's what he said and what it means for you. And real quick, make sure to like and subscribe if you want clear, no-hype breakdowns of what's really happening in the economy. With that being said, let's run the clip.
And you say that the tariff problem is a symptom of a much greater problem. What do you mean by that?
There's a financial problem. There's an imbalance problem. There are basically 5 big forces through history that drive everything. First, there's the money, credit, debt, economic cycle, in which there's a building up of debt in a cyclical way that becomes too large, and we're going to have problems. We're going to have a government debt problem. Maybe we can get into this. The second big force through time is the internal conflict force. The left and the right, differences in wealth and values causing a conflict that we're seeing it changing our political order. So the first is changing our monetary order. The second is changing our political order internally. And then the third is the great world order, how countries deal with each other. When there's a rising power, challenging an existing power, and now we are going from multilateralism, which is largely an American world order type of thing, to a unilateral world order in which there's great conflict. And the other 2 factors all through history have been acts of nature, droughts, floods, and pandemics. And number 4 is technology changing. And how they are coming together are the main forces behind this. For example, there can't be imbalances anymore in that environment.
When people hear about tariffs or trade wars, they think that's the big issue. But according to billionaire investor Ray Dalio, tariffs are just a symptom. The real danger comes from 5 much bigger problems that are all happening at the same time. The first big force is the debt cycle. After the pandemic hit, the US pumped trillions into the economy. Stimulus checks, emergency programs, low interest rates. That helped in the short term, but it added a massive amount of debt. In 2023 alone, the US paid over $800 billion, 0 cents just in interest. That's more than we spend on national defense. When a country borrows too much and can't slow down, it eventually hits a wall. That's what happened in Argentina in 2018. They printed too much money, their currency crashed, and inflation went through the roof. Second, there's internal conflict, and we're already seeing it. Look at how divided the US has become. Dalio says when a country becomes this polarized, when one half of the population believes the other half is the enemy, things can unravel fast. This is very similar to what happened in the 1930s, when extreme ideologies rose out of economic pain and social chaos. Then there's the shift in global power. China is challenging the US in every area: military, technology, trade. They've launched their own digital currency, built military bases on artificial islands, and signed trade deals with countries that used to rely on America. When a rising power threatens an existing one, it often leads to conflict. It's happened 12 out of 16 times in the past 500 years. The fourth force is nature, and we saw how real that is during the pandemic. But it's not just pandemics. Look at what's happened recently. Texas got hit with a deep freeze that shut down power for millions. California keeps getting slammed with wildfires. Floods in Pakistan displaced over 30 million people. Natural disasters like these aren't isolated anymore. They're overlapping with financial and political stress, making recovery harder each time. Finally, there's technology. AI is evolving so fast that no one really knows what to expect. ChatGPT can write essays, generate code, and replace basic customer service jobs. Self-driving trucks could replace 3.5 million drivers in the US alone. If governments don't manage this transition, millions of people could lose their livelihoods before new industries are ready to catch them. What makes this so dangerous, according to Dalio, is that all 5 forces are hitting at once. On their own, each one would be a challenge, but together, they could reshape the world economy in ways we haven't seen since the Great Depression. And that brings us to tariffs, because according to Dalio, they're not the root of the problem. They're just the smoke from a much bigger fire.
what you are describing, this complicated mix of challenges that the world is facing?
I think it's just a function of how well they're handled. You know, it's a reality that it's a desire to bring in tax revenue from that. It's a reality that we would like to build manufacturing and jobs here. This is a reality. That's how that's done, whether that's done in a practical way, whether that's done in a stable way, whether that's done with quality negotiations in which that's a mutual problem, or whether that's done in a chaotic and disruptive way.
Tariffs are always in the headlines. One country raises them, the other fires back, and markets react instantly. But Dalio makes it clear, tariffs by themselves aren't what break an economy. It's how they're used that matters. If they're part of a smart, well-planned negotiation, they can actually help. For example, when the US imposed tariffs on Chinese solar panels back in 2012, it gave American manufacturers a little breathing room to compete. That's a case where tariffs were used with some structure. But when they're slapped on without warning or used as political leverage, things spiral. In 2018, when the US added sweeping tariffs on steel and aluminum, it sparked a wave of retaliation. China responded with tariffs on US soybeans, hurting American farmers almost overnight. Prices went up, exports dropped, and it took years and billions in subsidies to soften the blow. Dalio points out that this kind of back and forth doesn't just rattle stock markets. It disrupts real businesses, jobs, and supply chains. When companies can't predict what's coming next, they stop investing, delay hiring, and raise prices to protect themselves. And when you add all that chaos to everything else we've talked about, rising debt, internal division, shifting world powers, it's easy to see why Dalio sees tariffs as more than just a trade tool. They're a spark, and if handled recklessly, they can ignite something much bigger. And this is why Ray Dalio is more worried than just a recession.
I want to ask you about something that's on a lot of people's minds, your predictions for the future. And I want to start with the R word. I know you think this is just a piece of it. Of course, I'm talking about a recession. Do you think it is likely that the United States will dip into a recession because of President Trump's tariffs?
I think that right now we are at a decision-making point and very close to a recession. And I'm worried about something worse than a recession if this isn't handled well. A recession is 2 negative quarters of GDP, and whether it goes slightly there, we always have those things. We have something that's much more profound. We have a breaking down of the monetary order. We are going to change the monetary order because we cannot spend the amounts of money, so we have that problem. And when we talk about the dollar and we talk about tariffs, we have that. We are having profound changes in our domestic order, how ruling is existing, and we're having profound changes in the world order. Such times are very much like the 1930s. I've studied history, and this repeats over and over again. So if you take tariffs, if you take debt, if you take the rising power challenging the existing power, if you take those factors and look at the factors, those changes in the orders, the systems, are very, very disruptive. How that's handled could produce something that is much worse than a recession, or it could be handled well.
Dalio's message is simple. A recession is bad, but it's survivable. What we should really fear is a breakdown in the system itself. That's what happened in the 1930s. And if we're not careful, we could be headed down a similar path again. During that time, the Great Depression didn't just wreck the economy, it created the conditions for some of the worst political and social breakdowns in modern history. People lost trust in their governments. Extremist movements gained power. Democracies collapsed. And eventually the world ended up in a global war. Dalio sees similar signs now. Social unrest is growing. In the US, we've seen riots, political violence, and rising anger between the left and the right. Faith in the system, whether it's Congress, the courts, or even elections, is fading. And when economic stress piles onto that kind of division, history shows things can get out of hand fast. Internationally, tensions are rising too. Trade wars, broken alliances, and military buildups are all back on the table. Countries are turning inward, just like they did in the years before World War II. So what's Ray's plan?
The budget deficit can be reduced to 3% of GDP. It will be about 7% if things are not changed. If it could be reduced to about 3% of GDP, and these trade deficits and so on are managed in the right way, this could all be managed very well. I believe that members of Congress should take the pledge, what I call the 3% pledge, that in one way or another, that they will get that budget deficit down to that number. If they don't, we're going to have a supply-demand problem for debt at the same time as we have these other problems. And the results of that will be worse than a normal recession.
The U.S. has to bring its deficit down to around 3% of GDP. Right now, it's almost double that. And if we keep spending like this, the entire system could start to crack. Here's why that's such a big deal. When the government runs a massive deficit, it doesn't have enough tax revenue to cover its bills, so it borrows. That means printing and selling huge amounts of U.S. Treasury bonds. But if too many bonds hit the market and not enough investors want them, the price of those bonds drops. To make them more attractive, interest rates go up. That ripple hits everyone. Mortgage rates rise, making homes less affordable. Business loans get more expensive. Credit card debt piles up faster. And worse, when the government has to pay higher interest on its own debt, it ends up borrowing even more just to keep up. It's a loop with no exit. Dalio doesn't sugarcoat it. He says too much debt means too much supply, not enough buyers. That breaks the system. And here's the scary part. If enough people lose confidence in U.S. debt, they start to question the value of the U.S. dollar itself. That's when things get dangerous, because if money loses its value, it's not just inflation. It's people losing trust in the entire financial foundation we all rely on. That's how a budget problem turns into a full-blown economic crisis. And that isn't all. Ray Dalio's warning gets even more personal here, because it's not just about government debt or interest rates. It's about your money. He says the dollar itself, the money you earn, save, and invest, could start to lose value much faster than people realize. And it's not just because of regular inflation. It's because if too much debt keeps piling up and there aren't enough buyers for that debt, people could start losing trust in U.S. bonds. And that trust is what gives the dollar its strength.
Are you saying that it could be as bad as a depression? What's your biggest fear?
The value of money. What is a storehold of wealth? That is a bond. In other words, one man's debt is another man's assets, bondholders. And so we're going to be in a situation where if that storehold of wealth is in jeopardy because there's too much supply and demand and so on, and we have a monetary inflation, we will have great disruptions. And that could be like the breakdown of the monetary system in 71. It could be like 2008.
Take bonds, for example. They are supposed to be the safe bet. They're what retirement accounts, pensions, and savings plans are built on. But Dalio warns that if too many of them flood the system and demand dries up, their value could collapse. And if that happens, it doesn't just hit Wall Street. It hits everyone: retirees, families, investors, anyone holding cash or assets tied to the dollar. This is what makes Dalio's warning so serious. It's not just a dip in the market or a bad year for stocks. It's the kind of crisis where people stop trusting the very thing they've always relied on, the money in their bank account. And when that trust disappears, the damage can be worse than anything we've seen before.
What's worst case scenario that you're warning of? To be very specific, to put it into terms people can
very
understand.
Specific, the value of money, internal conflict, that is not the normal democracy as we know it, and international conflict in a way that is highly disruptive to the world economy and could even be a military conflict, just as these breakdowns have occurred before. You know, we have a new order that began in 1945, a new monetary order and a new geopolitical order. And these go in cycles that can be measured. And I worry about the breakdown of that kind of an order, particularly since it doesn't need to happen, because there are certain things that could be done in which this is better, a better restructuring of these debts.
Dalio's biggest fear isn't just about money. It's what happens when the financial pressure becomes too much and everything else starts to crack. He warns that if things keep heading in the wrong direction, we're not just facing an economic collapse, we're facing a breakdown of order itself. Internally, political divisions are already tearing at the fabric of democracy. Left, rich, poor, trust in government at historic lows. Dalio says these aren't just headlines. And outside our borders, the picture gets even more dangerous. As global powers compete, especially the US and China, tensions are rising. Trade wars turn into tech wars, and tech wars can turn into military ones. We've already seen close calls in the South China Sea, rising threats around Taiwan, and a shift away from peaceful negotiation. Dalio paints a chilling picture. If trust in money fades, and both domestic and international systems start to unravel, it's not just a financial crisis anymore. It's a breakdown of the systems we rely on every single day. Political stability, global peace, the strength of the dollar, all of it could be at risk. But Dalio doesn't leave us with doom. He also talks about what can be done, and the window to act is still open. He says the US must reduce its budget deficit to around 3% of GDP. That would help slow the debt explosion and restore balance in the financial system. But it can't stop there. We also need to restructure debt, not through chaos, but with a clear, organized plan. That means tough decisions, but also smart leadership. And maybe most important, Dalio says we need real cooperation. Bipartisan efforts, not political games. Unity over division, the kind of leadership that can calm tensions instead of inflaming them. Internationally, the same applies. Instead of letting conflicts grow, we need negotiation, compromise, and mutual understanding, especially between the world's largest powers. Dalio isn't an alarmist. He's one of the most disciplined and respected minds in finance. So when he says this is bigger than a recession, it's not just noise, it's a signal. If you want more clear breakdowns of what's really happening in the global economy, subscribe now. No hype, no fear-mongering, just straight analysis you can actually use. See you in the next one.